Good evening, dear listeners. Welcome to this gentle sanctuary of relaxation, where we shall embark on a soothing journey through time. Tonight, I invite you to settle into a comfortable position, to let go of the day's worries, and to allow the soft embrace of tranquility to wash over you. The world outside may be bustling with noise and activity, but here, we shall create a cocoon of calm, a place where history unfolds gently, like a whisper carried on a gentle breeze. As we drift into the past, we will explore a topic that may seem, at first glance, a bit unassuming: the tedious history of Roman provincial tax collection calendar adjustments. While the subject may appear mundane, it is woven with rich narratives and the intricate tapestry of human experience. We will take our time, chapter by chapter, allowing each detail to settle into the mind like soft raindrops on a still pond. In the heart of the Roman Empire, amidst the grandeur of bustling cities and the quiet hum of rural life, there existed a complex system of governance that required meticulous attention to detail. You will hear about the cycles of taxation that shaped the lives of ordinary citizens, the bureaucratic processes that dictated the flow of resources, and the calendar adjustments that were not merely administrative changes, but reflections of the society's evolving needs. We will meander through the annals of history, pausing to observe how these adjustments were made, and the reasons behind them. From the agricultural calendar's influence on tax collection to the impact of local customs and imperial decrees, we will see how the Romans navigated their fiscal landscape with both precision and care. Each adjustment, each recalibration, was a response to the rhythms of life in the provinces, echoing the ebb and flow of seasons, harvests, and communal obligations. As we delve deeper, we will also touch upon the human stories that lie beneath the surface of these adjustments. The tax collector, often seen as a figure of authority, was also a crucial link between the people and the empire. We will ponder their challenges, the delicate balance they had to maintain, and the quiet resilience of the communities they served. In this way, we will uncover the profound connections that bind us all, transcending time and geography. Throughout our exploration, I encourage you to let your mind wander freely, to embrace the soothing cadence of my voice as it guides you through each nuanced detail. Allow your thoughts to drift like clouds across a serene sky, and if you find your eyelids growing heavier, that is perfectly alright. This journey is as much about relaxation as it is about learning, and it is my hope that you find comfort in the stories we share tonight. So, dear listeners, as we prepare to embark on this tranquil voyage through the history of Roman provincial tax collection calendar adjustments, I invite you to take a deep breath in, filling your lungs with calmness, and exhale slowly, releasing any tension you may be holding. Allow your body to sink deeper into relaxation, letting go of any distractions, as we transition now into the heart of our narrative. Let the past unfold gently before you, as we begin our exploration of this fascinating yet often overlooked aspect of Roman history. Together, we will discover the rhythms of taxation and time, the heartbeat of an empire, and the stories that have shaped our shared human experience. Now, let us begin. The history of Roman provincial tax collection calendar adjustments is a subject of considerable tedium, rooted deeply in the administrative practices of the Roman Republic and later the Roman Empire. The earliest records date back to the establishment of the Roman Republic in the late 6th century BCE, particularly around 509 BCE, when the nascent government began to formalize its taxation system for the burgeoning territories under its control. The Roman provinces, particularly those in the Italian peninsula, were initially subjected to a system of taxation that was rudimentary and based primarily on agrarian output. The Lex Agraria of 111 BCE introduced a more structured approach to land taxation, which contributed to the early framework of tax collection. Notably, the provinces of Sicilia and Sardinia served as significant test cases for such legislation, with the provincial governors tasked with the collection of taxes directly from the agrarian populace. The first substantial changes to the tax collection calendar arose during the tenure of the governor Gaius Gracchus in 123 BCE, who implemented reforms that emphasized the need for a standardized fiscal calendar across provinces. His administrative procedures included the introduction of a calendar that dictated the specific months during which taxes were to be collected. The months of June and October were particularly favored for the collection of the annual tax on agricultural output, as they coincided with the harvest seasons in the Mediterranean climate. Architecturally, the tax collection offices, known as census tabularia, were often constructed in the form of provincial capitals. For instance, in the province of Sicilia, the census tabularium would be situated adjacent to the Temple of Concordia, a choice symbolic of the harmony between state and citizen in fiscal matters. These structures were typically designed in the classical style, featuring columns and a portico, reflecting the Roman penchant for order and stability. Daily routines for tax collectors, known as publicani, were characterized by a tedious series of administrative tasks. The publicani were responsible for maintaining meticulous records of taxable land and produce, often utilizing wax tablets for record keeping. The daily routine would commence at dawn, with publicani convening at the census tabularium to review their ledgers. The process of tax assessment required them to inspect the land physically, a task that necessitated travel across the provinces, often by foot or on horseback, thus extending the duration of the tax collection process. The calendar adjustments continued throughout the Republic, with the introduction of the Julian calendar in 45 BCE by Julius Caesar marking a significant moment in the history of tax collection. The Julian calendar, which established a year of 365 days with a leap year of 366 days every 4 years, necessitated a re-evaluation of the established tax collection schedule. The adjustments to the fiscal calendar were formalized in 27 BCE when Octavian, later Augustus, consolidated power and initiated a series of administrative reforms. Under Augustus, the provinces experienced a more systematic approach to tax collection. The Lex Julia de Civitate granted Roman citizenship to certain provincial elites, thereby increasing their tax obligations but also their rights within the Roman system. The fiscal calendar was adjusted to align with the new administrative realities, with a focus on the months of March and September for tax assessments, thus creating a more predictable cycle for both collectors and taxpayers. The architectural styles of tax collection offices underwent a transformation during this period. The new census tabularia were often designed with larger atriums and more significant public spaces to accommodate the growing number of citizens engaging with tax officials. For example, in the province of Gallia Narbonensis, the tax offices were adorned with frescoes depicting the Roman triumphs, serving both a decorative and ideological function. As the empire expanded, the complexities of tax collection necessitated further adjustments to the calendar. The division of provinces into smaller administrative units during the reign of Diocletian in the late 3rd century CE, specifically around 284 to 305 CE, led to the need for an even more granular approach to tax collection. The introduction of the diocesan system meant that tax collection was now managed at multiple levels, and the calendar was adapted to reflect the increased frequency of assessments and collections. The daily routines of tax collectors in this period became increasingly bureaucratic. Official duties included coordinating with local elites, known as decuriones, who assisted in the collection process. The publicani were now required to submit monthly reports detailing collections and any discrepancies to the central administration. This necessitated a more regimented schedule, with specific days allocated for inspections and reviews, often resulting in long hours of administrative oversight. The architectural developments of tax offices mirrored these changes. By this time, the census tabularia had evolved into larger municipal buildings that housed various administrative functions. In the province of Britannia, tax offices were often incorporated into larger complexes that included courthouses and other public buildings, reflecting the growing complexity of governance. Throughout the 4th and 5th centuries CE, the constant adjustments to the tax collection calendar continued, with notable figures such as Emperor Constantine I, reigned 306 to 337 CE, contributing to the evolving system. Constantine's reforms included the establishment of the solidus as a standard currency, prompting a re-evaluation of tax rates and collection periods. The tax calendar was now heavily influenced by the agricultural seasons, with distinct periods set for the collection of land taxes and a separate schedule for the collection of trade taxes in urban centers. The introduction of the Edict of Maximum Prices in 301 CE also influenced the tax collection calendar, as it regulated prices on various goods, thereby affecting taxable income. Tax collectors were required to adapt their schedules in response to fluctuations in local economies, leading to further calendar adjustments. The architectural details of tax offices during Constantine's reign often included fortified structures, reflecting the increasing need for security in tax collection amid the political instability of the late empire. The decline of the Western Roman Empire in the 5th century CE brought about yet another wave of changes to the tax collection calendar. The fragmentation of authority and the rise of local warlords meant that tax collection became increasingly decentralized. The remnants of Roman tax structures persisted, however, the administrative procedures became less formalized. Tax collection often relied on agreements with local leaders, leading to a patchwork of fiscal calendars across the provinces. As the empire transitioned into the early Middle Ages, the specific dates and routines of tax collection became more obscure. Historical records from this period are sparse, but it is noted that the remnants of the Roman tax collection calendar continued to influence medieval practices. The persistence of Roman architectural styles in tax-related buildings can be observed in the remnants of structures like the Basilica of Maxentius, which, although repurposed, continued to serve functions related to governance and taxation in the early medieval period. In summary, the history of Roman provincial tax collection calendar adjustments encapsulates a long and tedious evolution of administrative practices, architectural developments, and the daily routines of tax collectors. From the nascent structures following the establishment of the Republic to the complexities of the late Empire, the adjustments to the tax collection calendar reflect broader socio-economic changes within the Roman world. The meticulous nature of these adjustments, coupled with the bureaucratic processes involved, renders the subject both crucial to understanding Roman governance and profoundly monotonous in its execution. The construction methods and materials used in Roman provincial tax collection offices, known as census offices or officia censualia, were characterized by a strict adherence to standardized architectural practices. Since the Roman Empire spanned diverse geographical regions, the adaptation of local resources was common, yet the fundamental design principles remained consistent. The primary materials employed in these constructions were stone, brick, and wood, each selected for their availability and durability. In provinces with ample limestone, such as Britannia, stone was the material of choice, with blocks typically measuring 0.5 meters in height and 1 meter in length. The average thickness of these blocks was approximately 0.3 meters, ensuring stability. In contrast, provinces lacking such stone resources, like parts of Gaul, often utilized fired clay bricks, with dimensions of 0.25 meters by 0.5 meters, which were readily available. The walls of these offices were often reinforced with timber beams, each measuring about 0.1 meters in diameter, spaced every 2 meters apart to provide additional structural integrity. Roofing techniques varied according to the local climate. In areas where heavy rainfall was common, such as the northern provinces, sloped roofs were constructed using overlapping terracotta tiles, each tile measuring approximately 0.3 meters by 0.2 meters. In drier regions, flat roofs were more prevalent, often constructed from a layer of clay mixed with straw, allowing for easy maintenance and repair. Maintenance procedures for these offices were regimented and outlined in the provincial administrative guidelines, which were revised approximately every 5 years. Inspectors, known as inspectors aedium, were appointed to oversee the integrity of the buildings. They conducted routine checks twice a year, typically in April and October, assessing the condition of roofs, walls, and foundations. Any identified structural issues were recorded meticulously in maintenance logs, with repairs mandated to be completed within a specified time frame, usually within 3 months of the inspection. The financial records related to the construction and maintenance of these census offices were equally methodical. Each office maintained a detailed ledger known as liber expensarum, documenting all expenditures related to construction, maintenance, and staffing. These ledgers were divided into several categories, including materials, labor, and administrative costs. For instance, in 27 BCE, the cost of stone per cubic meter was approximately 12 denarii, while brick was recorded at 8 denarii per 1,000 units. Labor costs for skilled masons averaged around 3 denarii per day, while unskilled laborers received about 1.5 denarii. The financial management of these operations was overseen by a designated official known as the quaestor, who was responsible for ensuring that expenditures did not exceed allocated budgets. The quaestor was expected to submit quarterly reports to the provincial governor, detailing the financial status of each census office, including any variances in anticipated versus actual costs. Personnel involved in the operation of the census offices were categorized into distinct roles, each with specific job descriptions. The primary role was that of the census collector, who was tasked with the collection of taxes based on the records of property and wealth maintained in the census. These collectors had to possess a thorough understanding of local tax laws and were often required to participate in training sessions, which were conducted annually in the month of March. Additionally, clerks, known as scribi, assisted collectors in maintaining accurate records of tax payments. Each clerk was responsible for managing the tabulae censuales, which were the official documents recording taxpayer information, including property size, ownership, and tax obligations. Clerks typically worked in conjunction with a supervisor, called the praefectus, who ensured compliance with established protocols and accuracy in record-keeping. Technical specifications for the operation of census offices included the establishment of a secure filing system for the tabulae censuales. Typically, these records were stored in wooden cabinets, approximately 1.5 meters high and 0.8 meters wide, secured with iron locks. Each cabinet contained multiple shelves to accommodate scrolls, which could measure up to 2 meters in length and 0.2 meters in width when unrolled. To facilitate the efficient processing of tax assessments, each census office was equipped with a rudimentary measuring device known as the groma, a tool used for measuring land area and determining property values. The groma typically consisted of a vertical staff, approximately 2 meters in height, with horizontal arms extending 1 meter on either side. This tool allowed surveyors to create right angles when plotting property boundaries, ensuring that assessments were both fair and accurate. In examining the administrative practices surrounding these offices, it is important to consider the intricacies of the tax collection calendar. The Roman tax year was divided into specific periods during which assessments and payments were due. The collection cycle typically began in the month of May, following the traditional agricultural calendar, as property owners were more able to pay their dues after the harvest. Tax collectors would visit properties during this time, armed with the tabulae censuales, to verify the information contained therein and collect the owed amounts. The first phase of the tax collection process involved the public announcement of due dates, which was typically made at local forums or marketplaces. This announcement, known as the edicto, was issued approximately 1 month prior to the collection period, providing taxpayers ample notice. The due date for property taxes was generally set for the last day of June, while income taxes were collected in September. This structured approach ensured that revenues were gathered in a timely manner, allowing the provincial administration to meet its financial obligations. Throughout this process, the meticulous documentation of financial transactions was paramount. Each payment was recorded in a liber receptorum, a ledger dedicated solely to documenting incoming revenues. The collector would note the taxpayer's name, the amount paid, and the date of payment, with entries typically written in a formal script known as capitolese. This system of record-keeping was designed to minimize errors and discrepancies, which could lead to disputes and potential loss of revenue. In the event of discrepancies or disputes regarding tax assessments, a formal appeal process was established. Taxpayers could submit grievances, known as appella, which would be reviewed by a panel of officials, including the quaestor and the praefectus. These appeals were documented in a separate ledger, and resolutions were typically issued within 3 months. The entire process was governed by established legal frameworks, ensuring that taxpayers had recourse to contest unfair assessments. Furthermore, the training and oversight of tax officials were essential components of the system. New census collectors underwent an induction program lasting approximately 6 weeks, focusing on legal statutes, ethical considerations, and the technical aspects of assessment. This program was designed to ensure that officials were well versed in the complexities of tax law, thereby reducing the incidence of fraud and corruption within the system. The precision and regularity of tax collection were vital for maintaining the financial health of the Roman Empire. The revenue generated from these provincial taxes funded various public works, military expenditures, and administrative costs. Consequently, the efficiency of this system directly impacted the stability and longevity of Roman governance. In summary, the history of Roman provincial tax collection, encompassing construction methods, maintenance procedures, financial records, personnel descriptions, and technical specifications, illustrates the empire's commitment to a highly organized and systematic approach. The detailed regulations and procedures established not only facilitated the collection of taxes but also ensured that the governance of the provinces remained effective and accountable. While inherently monotonous, these processes were instrumental in sustaining one of history's most expansive empires. The Roman provincial tax collection system, while ostensibly mundane, required a meticulous framework that extended into various aspects of construction methods, maintenance procedures, financial records, personnel management, and technical specifications. ### Construction methods and materials. The construction of tax collection centers, known as civic offices, was a vital task in Roman provinces. These structures were typically built using local materials, which varied according to the geographical context. In regions such as Gaul, limestone was a primary building material, while in the provinces of North Africa, clay bricks were more prevalent due to the availability of raw materials. The use of opus cementitium, or Roman concrete, was also common, particularly in urban centers where durability was paramount. From the 1st century BCE onwards, the design of these offices adhered to a strict architectural standard, characterized by rectangular layouts often measuring approximately 15 meters in width and 25 meters in length. The walls were often lined with marble or plaster to signify the importance of the taxation process. Roofs were typically flat, constructed from wooden beams covered with clay tiles, which measured roughly 40 centimeters by 25 centimeters. These roofs allowed for the collection of rainwater, which was a necessary resource for the bureaucratic staff. In the early 1st century CE, during the reign of Emperor Augustus, regulations were established to ensure that all tax offices were equipped with secure storage areas for financial records and collected taxes. These vaults, usually measuring 3 meters by 2 meters, were reinforced with iron bars and lockable doors, ensuring the integrity of the collected finances. Maintenance procedures. Regular maintenance of these civic offices was crucial for the continued functionality of the tax collection system. Each province was required to establish a maintenance schedule that adhered to strict timelines. For instance, inspections were mandated every quarter, during which the structural integrity of the buildings was assessed. If any damages were found, repairs had to be initiated within a fortnight to prevent further deterioration. The materials used in maintenance reflected the original construction methods. For example, if a wall required repair, local limestone sourced from nearby quarries was used, ensuring consistency in appearance and structural quality. In the case of plaster damage, a mixture of lime, sand, and water was prepared, and the application was carried out by skilled laborers trained in traditional Roman building techniques. In terms of costs, maintenance expenditures were typically allocated from the provincial budget. A standard annual maintenance budget for a tax office was approximately 2% of the building's original construction costs. For example, if a tax office was constructed at a cost of 10,000 sestertii, an allocation of 200 sestertii was made annually for maintenance. Financial records and costs. The financial records associated with tax collection were vast and intricate, requiring a sophisticated system of documentation. Each provincial tax office maintained a comprehensive ledger, known as the tabulae, which recorded all transactions related to tax collection. These ledgers were often inscribed on wax tablets, with each tab. The records included details such as the type of tax collected, whether it be land tax, *tributum*, poll tax, *capitatio*, or customs duties, *portorium*, and the amounts collected from each taxpayer. Moreover, these records required the date of collection, the identity of the collector, and any exemptions granted to taxpayers, which were a significant aspect of provincial governance. The costs of maintaining these records were also considerable. Scribes employed in tax offices were compensated at a rate of 1,200 sestertii annually, a figure that could fluctuate depending on the province's wealth. The cost of materials for record keeping, including wax tablets and styluses, was estimated to consume an additional 200 sestertii per annum. Personnel and job descriptions. The personnel involved in the tax collection process were critical to the overall efficiency of the system. The primary figure in each provincial tax office was the questor, who was responsible for overseeing all tax-related activities. The questor's duties included supervising the collection process, ensuring compliance with tax regulations, and maintaining the accuracy of financial records. It was not uncommon for questors to serve multi-year terms, often lasting between 3 to 5 years, depending on the province's administrative structure. Assisting the questor were several clerks, known as scribi, who handled the day-to-day documentation processes. Each clerk was trained in the art of writing and record-keeping, often beginning their careers as apprentices in their early teens. The expected proficiency in writing was such that by the age of 20, a clerk was expected to manage the financial records of an entire tax office independently. In addition to the clerical staff, tax offices employed a number of publicani, or tax farmers, who were private individuals contracted to collect taxes on behalf of the state. The publicani were responsible for a specific region, with contracts typically lasting for 5 years. They paid a fixed sum to the government for the right to collect taxes, hoping to recoup their investment through the taxes they gathered. The financial stakes were high, as the average publicanus could earn between 20,000 to 50,000 sestertii per year, depending on the region and efficiency. Technical specifications. The technical specifications governing the collection of taxes were detailed and comprehensive. The Roman Empire mandated standardized methods for assessing property values for tax purposes. For land tax assessments, surveyors known as agrimensors were employed to measure land parcels. These surveyors utilized a tool called the groma, a simple surveying instrument that consisted of a vertical pole with crossbars at right angles, allowing for precise measurements. Each land parcel was measured in iugera, a unit equivalent to approximately 0.25 hectares. In addition to land assessments, the empire established guidelines for collecting customs duties at ports. Each port was equipped with a census officer, who used a set of weighing scales calibrated to an exact standard of measurement. Typically, these scales were made from iron and had a capacity of up to 100 kilograms, ensuring accurate assessments of goods entering and leaving the province. The specifications for customs duties required that all goods be documented with a detailed invoice, reflecting their value and nature, which facilitated the accurate calculation of taxes owed. Tax collection also necessitated the use of counters, or calculi, which were small stones or wooden tokens used to keep track of collected sums. Each counter represented a specific value, and the use of these tools was integral to maintaining accurate accounts. A typical set of counters included stones marked with values ranging from 1 to 100 sestertii. Furthermore, the Roman provincial tax code included provisions for appeals against tax assessments. Taxpayers were allowed to contest their assessments by submitting a formal request to the provincial governor, who would then appoint a tribunal to review the case. This process was outlined in the Lex Irnitana, a legal document inscribed around 100 CE, which codified various aspects of provincial tax law. In conclusion, the tax collection system in Roman provinces was characterized by its intricate web of construction standards, maintenance protocols, financial documentation, and personnel management. Each aspect, while seemingly tedious, was integral to the larger framework of provincial governance and contributed to the overall stability and sustainability of the Roman Empire. The detailed regulations and specifications ensured that tax collection was conducted with precision and accountability, reflecting the Romans' commitment to administrative efficiency, even in the most mundane of tasks. The construction methods and materials employed in the Roman provincial tax collection infrastructure were characterized by a remarkable degree of uniformity and adherence to established standards. The earliest known tax collection offices, or census centers, were constructed from local materials, with variations depending on the region. In provinces such as Gallia Narbonensis, where limestone was readily available, buildings were often erected using this durable stone, while in more northern provinces like Germania Inferior, timber from local forests was utilized. The Roman engineering principle of utilizing locally sourced materials not only reduced transportation costs but also ensured that the structures were resilient to the environmental conditions of the respective provinces. The dimensions of these census centers were typically standardized to facilitate rapid construction and consistent functionality. Most buildings were rectangular, measuring approximately 10 meters in width and 20 meters in length, with a height of about 4 meters. The roofs were generally constructed using wooden beams covered with thatch or tiles, depending on local availability and climate considerations. The walls were typically 1 meter thick, enhancing structural integrity and insulation. In terms of maintenance procedures, the Romans implemented systematic routines to ensure that these tax collection facilities remained in optimal condition. Each year, following the harvest season, provincial officials were mandated to conduct inspections of all census centers. These inspections, which occurred in late October, involved a thorough assessment of the structural integrity of the buildings, including the examination of roofs for leaks, walls for cracks, and floors for stability. Repairs were documented in official records, and any significant issues required immediate attention from designated maintenance crews. The financial records pertaining to the construction and maintenance of these buildings were meticulously kept, reflecting the Roman emphasis on accountability. Each province maintained a detailed ledger, known as the Codex Fiscalis, which recorded all expenditures related to tax collection infrastructure. For instance, in 15 BCE, the construction of a new census center in Hispania Baetica cost approximately 1,500 sesterces, a significant sum that included labor, materials, and logistical expenses. Annual maintenance costs averaged around 200 sesterces per building, accounting for repairs, cleaning, and occasional renovations to accommodate increased tax collection demands. Personnel involved in the tax collection process encompassed a range of roles, each with specific responsibilities. The primary figure was the publicanus, a tax collector who was often a local citizen responsible for overseeing the collection of taxes in a designated area. The publicanus was supported by a team of clerks, known as scribi, who managed documentation and record-keeping. Each scriba was expected to maintain meticulous records of tax assessments and collections, ensuring that discrepancies were minimized. Additionally, there were appointed officials known as curators, whose role was to supervise tax collection activities, ensuring compliance with Roman laws and regulations. These curators were typically individuals of standing within the local community, often chosen for their experience and knowledge of administrative procedures. The responsibilities of curators included conducting audits of tax records and overseeing the activities of publicani and scribi. The technical specifications of the tax collection process were equally detailed and systematic. Tax assessments were conducted annually, with the fiscal year traditionally beginning on the Ides of March, or March 15th. Each province was required to submit a comprehensive report of its tax revenues by the end of December, detailing the amounts collected from various sources, including property taxes, customs duties, and income from public lands. The process of tax assessment began with the collection of data regarding land ownership and property values. Surveyors, known as agrimensors, were employed to measure land parcels, using tools such as the groma for surveying and the chorobates for leveling. These measurements determined the taxable value of each property, which was then recorded in the tabulae, a series of official tablets maintained in each province. The tax rates were calculated based on a percentage of the assessed value of properties, with variations depending on the type and location of the property. For example, agricultural land might be assessed at a rate of 10% of its value, while urban properties could be taxed at a higher rate of 15%. The collected taxes were then aggregated and submitted to the central treasury in Rome, where they were recorded in the Terrarium, the state treasury. The documentation generated throughout the tax collection process was voluminous and required a sophisticated system of organization. Each province adopted a standardized filing system, utilizing wax tablets for temporary records and clay tablets for more permanent documentation. The use of wax tablets allowed for ease of editing, as scribe could erase and update figures as necessary. Conversely, clay tablets, once inscribed, served as immutable records of tax assessments and collections, forming the backbone of provincial financial accountability. Moreover, the transmission of financial records from the provinces to Rome was conducted with strict adherence to protocols. Each year, at the close of the fiscal year, provincial governors were required to dispatch a courier to deliver the financial reports to the capital. These couriers were often selected for their reliability and speed, and the journey from distant provinces such as Britannia could take several weeks, necessitating careful planning and consideration of route logistics. The costs associated with the entire tax collection process were significant and varied by province. In addition to personnel expenses, the costs of materials for construction and maintenance, and transportation of financial records, provincial governments also had to account for security measures. Tax collectors often faced risks from local populations resistant to taxation, leading to the necessity of hiring guards to accompany publicani during collection periods. In 23 CE, for instance, the provincial budget for security in the province of Africa amounted to approximately 300 sesterces, a substantial allocation reflecting the challenges of ensuring tax compliance. Furthermore, the intricacies of tax collection extended beyond mere financial transactions, as socio-political factors often influenced the process. Local elites frequently sought to manipulate tax assessments for personal gain, leading provincial officials to develop strategies to mitigate such influences. By implementing checks and balances, such as requiring dual signatures on financial documents and spot audits by curators, the Romans aimed to uphold the integrity of the tax collection system. In conclusion, the Roman provincial tax collection calendar adjustments were not merely administrative formalities but represented a complex interplay of construction, maintenance, personnel management, and financial oversight. The Romans' commitment to detail and efficiency in these processes reflected their broader administrative philosophy, ensuring that even the most mundane aspects of governance were conducted with precision and accountability. This meticulous approach to tax collection, encompassing a wide array of technical specifications and regulations, laid the groundwork for an effective fiscal system that would endure for centuries. The construction methods and materials utilized in the Roman provincial tax collection infrastructure were predominantly influenced by the prevailing architectural practices of the time. From the early imperial period, specifically around 27 BCE, the Romans exhibited a penchant for durability and functionality in their constructions. The most common materials incorporated into tax collection facilities included locally sourced limestone and brick, with the latter often fired at temperatures exceeding 900 degrees Celsius to ensure structural integrity. In the establishment of tax offices, or celli publici, the Romans implemented a rectangular layout, typically measuring between 10 to 15 meters in width and 20 to 30 meters in length. The walls were constructed to a thickness of approximately 0.5 meters, designed to withstand both the elements and the stress of daily operations. Roofs were frequently built using wooden beams, which were covered with tiles made from terracotta, with a standard tile size of 30 cm by 60 cm. This design not only provided adequate shelter but also facilitated the efficient collection of rainwater for use in the office. Maintenance procedures for these tax collection facilities were outlined in a series of regulations formalized in the Lex Julia de Repetundis of 149 BCE. These regulations mandated periodic inspections conducted by local magistrates every 5 years to assess structural integrity and operational efficiency. Any detected issues, such as cracks in the walls or leaks in the roofing, required immediate rectification. Common maintenance tasks included the reapplication of lime plaster to internal walls, which was necessary approximately every 3 to 5 years, and the replacement of roofing tiles that had deteriorated due to weather exposure, typically necessitated every decade. Financial records pertaining to the construction, maintenance, and operation of the tax collection infrastructure were meticulously documented. The Acta Publicorum served as the primary ledger, detailing all expenditures related to construction materials and labor costs. For instance, an analysis of records from the province of Gaul in 23 CE reveals that the construction of a cella publica cost approximately 25,000 sesterces, which included 10,000 sesterces for materials and 15,000 sesterces for labor. Notably, labor costs fluctuated significantly based on the season, with higher wages noted during the harvest months of July and August, when agricultural laborers were in short supply. Personnel involved in tax collection were categorized into several distinct roles, each with specific job descriptions and responsibilities. The procurator, appointed by the emperor, was responsible for overseeing the entire tax collection process within a province. This position demanded a comprehensive understanding of both fiscal policy and local economic conditions. Below the procurator were the lictors, who served as assistants and couriers, tasked with the delivery of tax notices and the collection of dues from local citizens. Typically numbering between 2 to 4 per office, the lictors were expected to maintain accurate records of all transactions. Additionally, there were local tax assessors known as decuriones, who were elected from among the local elite. Their role involved evaluating the taxable wealth of citizens and enterprises, a task that required an in-depth knowledge of local commerce, property values, and agricultural output. In 40 CE, the Provincial Assembly of Thessalonica recorded an instance where 20 decurions were elected to assess property values for taxation purposes, illustrating the importance of local governance in the tax collection process. The technical specifications governing the construction and operation of tax collection facilities were codified in a series of decrees issued by the Senate, reflecting the centralized nature of Roman governance. One such decree, known as the Senatus Consultum de Municipiis of 44 BCE, outlined the minimum dimensions and design standards for tax collection offices, specifying that rooms dedicated to record-keeping must be no less than 12 square meters. Furthermore, the decree mandated that all tax offices be equipped with a writing table, measuring approximately 1.5 meters in length and 0.75 meters in width, to facilitate the accurate recording of financial transactions. The intricacies of maintaining accurate financial records cannot be overstated. The tabularium, or record office, was established in each provincial capital, serving as the centralized repository for all tax-related documentation. This office was responsible for the archiving of various critical documents, including tax assessments, payment receipts, and correspondence with the central government. The average size of a tabularium ranged from 50 to 100 square meters, with reinforced wooden shelving utilized for the storage of scrolls made from papyrus or parchment. Costs associated with the upkeep of the tabularium were often substantial. Annual operating expenses, as noted in records from 30 CE, averaged around 5,000 sesterces, which accounted for salaries of clerical staff, parchment procurement, and the maintenance of writing equipment. The clerks, known as scribae, were essential for ensuring that records were accurately maintained and updated. Each scribe was typically paid a monthly wage of 300 sesterces, a rate that was considered competitive for the time. In addition to the clerical staff, the employment of security personnel was vital to safeguarding the sensitive financial records housed within the tabularium. This role was typically filled by a praefectus, who oversaw a small group of guards. The praefectus was responsible for ensuring that all records were securely stored and that only authorized personnel had access to them. The financial records from 25 CE indicate that the salary for a praefectus averaged 600 sesterces per month, highlighting the importance placed on the security of tax records. The meticulous nature of tax collection extended to the technical specifications of the actual collection process. Tax collectors operated under a system of strict guidelines, which dictated the methods of assessment and collection. The vectigal, or tax, was assessed based on a percentage of an individual's or business's estimated income or property value. For example, in 15 CE, a decree established that agricultural land was subject to a tax rate of 10% of its assessed value, requiring the decurions to conduct thorough evaluations of local farms. The implementation of this tax rate necessitated the use of standard measuring tools, including a modius, a container used to measure grain, which held approximately 8.7 liters. The collection process often involved the use of official seals, known as sigilla, which were affixed to tax notices and payment receipts to authenticate the documents. These seals were crafted from wax, typically measuring 5 centimeters in diameter, and featured the insignia of the provincial procurator. The presence of an official seal was crucial in preventing fraud and ensuring that payments were made to the correct authorities. In summary, the Roman provincial tax collection system was characterized by its emphasis on durability, accuracy, and procedural rigor. From the construction of tax collection facilities to the meticulous maintenance of financial records, every aspect of the system was governed by a set of detailed regulations designed to ensure efficiency and reliability. The roles of personnel were clearly defined, and technical specifications were strictly adhered to, reflecting the Romans' commitment to establishing a fiscal framework that would serve as a model for future administrations. Ultimately, the legacy of these practices can be seen in the continuing evolution of tax systems throughout history, a testament to the enduring influence of Roman methodologies on modern governance. The detailed study of this taxing aspect of Roman society not only highlights the complexities of their administrative procedures but also serves as an essential foundation for understanding the broader implications of taxation in the development of statecraft and public finance. ### The tedious history of Roman provincial tax collection calendar adjustments, continued. ### Regional variations and comparisons. The Roman Empire, vast and complex, was characterized by a multitude of provinces, each presenting unique regional variations in tax collection methods and calendar adjustments. While the overarching framework of taxation was dictated by the central authority in Rome, local conditions necessitated adaptations that reflected the socio-economic realities of each province. For instance, in the province of Egypt, the tax system was heavily influenced by the agricultural cycle of the Nile River. Here, the inundation of the Nile dictated agricultural productivity, which in turn affected tax yields. Tax due dates were often aligned with the flooding season, allowing for an optimal harvest before the collection. This cyclical relationship resulted in a tax calendar that was not merely a bureaucratic tool but a reflection of the region's agrarian dependence. Comparatively, in the provinces of Gaul, which had a more diversified economy encompassing trade and crafts, tax collection periods were more flexible. The presence of urban centers such as Lugdunum, modern Lyon, with their bustling marketplaces, meant that tax collection could be adjusted based on commercial cycles rather than solely agricultural ones. Moreover, the provincial governors were granted a degree of autonomy to modify tax schedules based on local conditions. In provinces like Hispania, where mining activities were prominent, taxes on mineral resources were often levied at different times of the year, corresponding with the extraction cycles of various ores. The result was a patchwork of tax calendars that, while ultimately derived from Roman law, showcased the adaptability of the system to local needs. ### Evolution over different time periods. The evolution of the Roman provincial tax collection calendar is marked by significant transformations from the Republic through the Empire and into the later stages of the Roman world. Initially, during the Republican period, tax collection was relatively straightforward, primarily focused on land taxes, tributum, and a few other levies. The system relied heavily on local elites to collect taxes on behalf of the state, leading to a relatively informal and decentralized approach. As the empire expanded, the complexity of tax collection grew. By the Julio-Claudian period, the introduction of direct taxation on a wider range of goods and services necessitated more formalized collection calendars. The establishment of the census during Augustus' reign was a pivotal moment. It provided a systematic method for assessing property value and thereby determining tax liabilities. This development led to a more rigid tax calendar that mandated regular assessments and collections, often coinciding with the imperial administrative calendar. The transition into the later Roman Empire saw further bureaucratic refinements and adjustments. The Diocletian reformations in the late 3rd century introduced significant changes to tax collection, including the codification of tax laws and the establishment of a more centralized authority. The introduction of the annona, a tax on agricultural produce, required synchronization with harvest periods across the empire. As a result, tax calendars became increasingly standardized, yet still retained allowances for regional adjustments based on local harvests and economic conditions. #bureaucratic regulations and laws. The Roman tax collection system was underpinned by a complex web of bureaucratic regulations and laws designed to ensure effective revenue generation while maintaining a semblance of order. The legal framework governing tax collection was primarily codified in the Lex Julia et Papia, which outlined the responsibilities of provincial governors and local magistrates in tax assessment and collection. In addition to the overarching laws, detailed regulations dictated the methods of collection, the penalties for non-compliance, and the rights of the tax collectors, known as publicani. Tax collectors were often private contractors who bid for the right to collect taxes in a given province. This practice fostered a competitive environment but also led to abuse as publicani sought to maximize their profits, frequently resulting in overcollection and exploitation of local populations. To mitigate these issues, various laws were enacted, such as the Lex Voconia, which sought to protect the lower classes from excessive taxation. Additionally, the establishment of a court system to adjudicate tax disputes became necessary as complaints against tax collectors proliferated. This legal apparatus contributed to the bureaucratic complexity of tax collection, resulting in a myriad of regulations that local officials were tasked with navigating. Furthermore, the introduction of the concept of tax farming allowed the state to delegate tax collection to private entities, further complicating the regulatory landscape. This system often entailed intricate contracts that specified collection quotas, payment schedules, and penalties for failure to meet targets. The nuances of these agreements could vary widely based on local customs and practices, leading to a diverse array of tax collection regulations across provinces. #Supply chain and logistics. The logistics of tax collection in the Roman Empire were as intricate as they were essential. The very nature of tax collection required a well-orchestrated supply chain to ensure that tax revenues were collected efficiently and effectively. The transportation of goods that were taxed, whether it be grain, livestock, or precious metals, necessitated a robust infrastructure of roads, ports, and storage facilities. Key to this logistical framework were the Roman roads, which facilitated the movement of goods across vast distances. The Via Appia, for example, served as a critical artery for transporting taxes from the provinces to the capital. The maintenance of these roads was paramount, and local governments were often tasked with ensuring their upkeep, a responsibility that was frequently intertwined with tax collection duties. In addition to roads, the Roman Empire also relied on an extensive network of ports, particularly in coastal provinces like Sicilia and Achaia. These ports were vital for the import and export of goods, including tax revenues collected from commerce. The efficiency of these logistics was further enhanced by the use of standardized weights and measures, which ensured consistency in tax assessments and collections. Moreover, the timing of tax collection was influenced by logistical considerations. For instance, the collection of grain taxes was often synchronized with the harvest season to minimize spoilage and ensure that taxes could be paid in kind. The Roman authorities implemented storage solutions, such as granaries, to handle the influx of goods during peak collection periods. This foresight in logistics not only facilitated tax collection but also played a crucial role in maintaining the stability of food supplies within the empire. Record-keeping methods. The meticulous nature of Roman provincial tax collection was reflected in the sophisticated record-keeping methods employed by tax officials. Accurate record-keeping was essential for ensuring transparency, accountability, and efficiency within the tax system. Various methods were utilized, ranging from simple tallying systems to more complex documentation practices. At the most basic level, tax collectors employed physical tokens or tally sticks to keep track of collected taxes. This method allowed for quick assessments of what had been gathered and what remained outstanding. However, as the complexities of tax collection grew, so too did the sophistication of record-keeping techniques. One of the hallmark innovations in record-keeping was the use of wax tablets and styluses. These portable writing tools enabled tax collectors to document transactions in real time. Each tablet could be inscribed with details such as the type of tax collected, the amount, and the identity of the payer. Once the tablets were filled, they could be archived for future reference, creating a robust historical record of tax collections. In addition to wax tablets, the Romans also employed a system of codexes, early forms of bound books made from papyrus or parchment. These codexes allowed for more extensive documentation, including detailed accounts of tax revenues, expenditure reports, and summaries of disputes. Such records were critical during audits and assessments by higher authorities, ensuring that tax collections were not only accurate but also justifiable. Furthermore, the reliance on written records underscored the importance of literacy in the Roman administration. Tax collectors were often required to be literate, as they needed to comprehend and implement complex tax laws and regulations. The training and education of these officials became a crucial aspect of maintaining an effective tax collection system. In conclusion, the history of Roman provincial tax collection calendar adjustments is a tapestry woven with regional variations, bureaucratic regulations, logistical challenges, and meticulous record-keeping practices. Each of these elements contributed to a system that, while inherently tedious, was vital for the functioning of one of history's most formidable empires. As we continue to explore the minutiae of this topic, we uncover not only the mechanisms of tax collection but also the broader socio-economic implications that shaped the lives of millions across the Roman world. The tedious history of Roman provincial tax collection calendar adjustments, Part 7. In the annals of Roman provincial tax collection, it is imperative to consider the regional variations that permeated the fiscal landscape of the empire. The vast territories of Rome were not monolithic, rather, they were a patchwork of cultures, languages, and local customs that significantly influenced tax collection practices. These regional disparities were pronounced and, in many cases, dictated not only the timing and methods of tax collection but also the very nature of the taxes imposed. Regional variations and comparisons. For instance, in the provinces of Hispania, the collection of taxes was markedly different from practices in Gaul. In Hispania, the agricultural calendar played a pivotal role in shaping tax collection schedules. The harvest season, typically occurring between late summer and early autumn, saw an influx of agricultural produce, thus necessitating a tax collection period aligned closely with the agricultural output. Tax collectors, known colloquially as publicani, would often coordinate with local farmers to ensure that taxes could be levied in kind, collecting grain or wine at a time when these goods were abundant. Conversely, in the more commercially developed province of Asia Minor, the tax structure was heavily influenced by trade and urbanization. Here, taxes were often assessed in monetary terms rather than goods. The bustling markets of cities like Ephesus and Smyrna required a different approach to tax collection, one that was more immediate and responsive to the ebb and flow of commerce. The local curiales, or city officials, played a critical role in managing these tax obligations, often creating a calendar of fiscal duties that aligned with trade fairs and market days to optimize revenue collection. These regional practices were not merely reflections of local economies but were also influenced by the overarching imperial mandates. The Roman government, while granting some autonomy to local provinces, implemented certain standardized regulations, thus leading to a juxtaposition of local custom and imperial oversight. Such discrepancies often resulted in friction between provincial governors and the central authorities in Rome, raising the specter of insurrections and tax revolts, notably in regions where tax burdens were deemed excessive or unjust. Evolution over different time periods. The evolution of tax collection practices across various time periods reflects the changing dynamics of the Roman Empire itself. During the early Republic, tax collection was primarily a matter of local governance, with communities managing their fiscal responsibilities. The introduction of the census, a systematic enumeration of citizens and their property, laid the groundwork for a more organized tax structure. Initially, this process was rudimentary, relying on local magistrates to assess property values and impose taxes accordingly. As the empire expanded, the complexities of governance necessitated the establishment of a more sophisticated bureaucratic framework. By the late Republic and into the imperial era, the growing need for revenue to support military campaigns and public works led to the formation of a centralized tax collection system. The quaestors, or financial officers, were appointed to oversee tax collection, and provincial governors began to wield greater authority over fiscal matters. The early imperial period saw the codification of tax laws and regulations, with Emperor Augustus instituting the Lex Julia de Annona, which regulated grain distribution and taxation in provinces reliant on agriculture. This period marked a significant shift towards a more systematic approach to tax collection, characterized by the establishment of fixed tax rates and deadlines for payment. The calendar adjustments enacted during this time were meticulous, often requiring extensive documentation and record-keeping to ensure compliance. As the empire entered the crisis of the 3rd century, tax collection became increasingly fraught with challenges. The collapse of central authority in certain regions led to rampant corruption and tax evasion, prompting a series of reforms aimed at restoring order. The introduction of the capitatio and iugatio taxes, which assessed individuals and land respectively, reflected an attempt to stabilize revenues amidst the chaos. These tax reforms necessitated a re-evaluation of collection calendars to accommodate the new tax structures. Bureaucratic regulations and laws. The bureaucratic regulations governing tax collection were extensive and, at times, bewildering. The Roman legal framework surrounding taxation was underpinned by a series of laws and edicts that evolved over time. The Lex Agraria, for example, established the parameters for land taxation, while the Lex Aelia Sentia addressed issues of citizenship and tax obligations. These laws were not mere formalities. They were foundational elements of Roman governance that shaped the very fabric of provincial administration. Moreover, the bureaucratic machinery responsible for enforcing these regulations was itself a complex organism. Tax collectors were often required to undergo training in legal texts and administrative procedures, ensuring that they were well versed in the myriad rules governing tax assessment and collection. The appointment of tax officials often came with a litany of regulations designed to minimize corruption and ensure fairness. Yet, the sheer volume of rules often led to confusion and disputes, with taxpayers frequently contesting assessments that they deemed excessive or incorrect. The introduction of the edictum, a public announcement of tax rates and collection procedures, was one method employed to standardize information and reduce misunderstandings. These edicts were often displayed in public spaces, yet the literacy rates in various provinces meant that many citizens remained unaware of their obligations. The result was a reliance on local intermediaries, such as merchants and community leaders, to disseminate information and guide compliance. Supply chain and logistics. In the context of tax collection, supply chain and logistics played a vital role in ensuring that the necessary goods, resources, and funds were transported efficiently from provincial locales to the heart of the empire. The logistics of tax collection were far from straightforward. They involved a complex network of roads, waterways, and transport systems that facilitated the movement of goods. The Roman road network, famed for its engineering prowess, served as a backbone for tax collectors, allowing them to traverse vast distances and reach remote areas in a timely manner. Transportation methods varied widely, depending on the geographical context. In mountainous provinces, for instance, pack animals such as mules were often employed to navigate rugged terrain. In contrast, flat regions with navigable rivers relied heavily on boats and barges to transport taxable goods. The efficiency of these transport systems was paramount, delays in the movement of goods could lead to significant revenue shortfalls, prompting provincial officials to develop contingency plans to address potential disruptions. Moreover, the collection of taxes in kind, particularly in agricultural regions, required meticulous planning regarding storage and distribution. Granaries and warehouses were strategically located to facilitate the collection of harvested goods, ensuring that they could be processed and delivered to central depots without spoilage. This logistical challenge was compounded during periods of poor harvest or famine, where tax collectors faced the dual burden of managing both agricultural shortages and taxpayer discontent. Record-keeping methods. Record-keeping in the context of Roman tax collection was an essential yet often underappreciated aspect of the bureaucratic process. The Romans employed various methods to maintain accurate records of tax assessments, collections, and disputes. The use of wax tablets, which allowed for easy erasure and amendments, was commonplace among tax collectors. These tablets served as the primary medium for recording transactions, assessments, and taxpayer information, providing a practical solution to the challenges of maintaining accurate records in the field. In addition to tablets, the Romans also utilized scrolls made from papyrus or parchment, particularly for more permanent records. These scrolls could be stored in public archives or the offices of provincial governors, where they served as official documentation of tax obligations. The meticulous nature of record-keeping was underscored by the use of notaries, officials tasked with ensuring that records were maintained in accordance with legal standards. Their role was vital in preserving the integrity of the taxation process, as disputes over tax assessments often hinged on the accuracy of recorded information. The evolution of record-keeping methods mirrored advancements in administrative practices. As the empire expanded and the complexities of governance increased, so too did the need for organized record systems. The introduction of standardized accounting practices, including the use of ledgers to track incoming and outgoing revenues, marked a significant progression in the sophistication of Roman tax administration. In conclusion, the history of Roman provincial tax collection is a tapestry woven with regional variations, bureaucratic regulations, logistical challenges, and meticulous record-keeping practices. Each of these elements played a crucial role in shaping the fiscal landscape of the empire, influencing not only the collection of taxes but also the very relationship between Rome and its provinces. As we continue to explore the intricate details of this tedious history, it becomes evident that the mundane aspects of tax collection were not merely bureaucratic inconveniences but foundational components of Roman governance that have left an indelible mark on the course of history. The tedious history of Roman provincial tax collection calendar adjustments, Part 8. As we delve deeper into the intricate tapestry of Roman provincial tax collection, it becomes essential to explore the regional variations and comparisons that characterize the process across the vast expanse of the Roman Empire. The provinces, each with their unique local customs, economic conditions, and administrative practices, exhibited a diverse array of tax collection methods that often diverged significantly from one another. This divergence was not merely a reflection of local governance but also indicative of the broader socio-economic landscape of each region. Regional variations and comparisons. In Gaul, for instance, the tax collection calendar was significantly influenced by the agrarian cycle, which was dictated by the climatic conditions of the region. The Gallic provinces, characterized by their fertile lands, witnessed a robust agricultural output. As such, the tax collection periods were often aligned with the harvest seasons. Local magistrates would typically schedule the collection soon after the main harvest was completed, allowing farmers to liquidate their goods and settle their tax obligations without undue hardship. In contrast, the provinces of Africa, where arid conditions limited agricultural yields, employed a different strategy. Here, tax collection was often staggered throughout the year, with officials collecting taxes based on the sale of goods in urban centers, rather than on the harvest cycle. Moving to the eastern provinces, such as Asia Minor and Judea, we find a complex interplay between local customs and imperial regulations. In these regions, the imposition of taxes was often met with resistance, leading to the establishment of more stringent collection methods. The local governors, tasked with maintaining order and ensuring revenue, often resorted to elaborate systems of public contracts, known as tax farming. This practice involved outsourcing tax collection to private individuals who would bid for the right to collect taxes in a given area. This system, while effective in generating revenue, often resulted in widespread abuses and discontent among the populace, illustrating the tension between imperial authority and local autonomy. Evolution over different time periods. The evolution of tax collection practices in the Roman provinces can be traced through a series of reforms and adjustments that occurred over the centuries. The early days of the Republic saw a relatively straightforward tax system, primarily reliant on direct assessments based on property ownership. However, as the empire expanded, the need for a more systematic and organized approach to tax collection became evident. By the late Republic and into the early imperial period, we witnessed the emergence of a more complex bureaucratic apparatus designed to oversee and regulate tax collection. One pivotal moment in this evolution was the introduction of the census during the reign of Augustus. This comprehensive enumeration of the population was instrumental in establishing a more equitable tax system, allowing for the assessment of taxes based on demographic data. The census not only facilitated a more organized collection process but also enabled the central government to allocate resources more effectively across the provinces. Over time, the frequency of the census increased, leading to periodic adjustments in tax rates and collection methods, reflecting the changing economic conditions of the provinces. The 3rd century marked another significant turning point in the history of Roman tax collection. The crisis of the 3rd century brought with it a series of economic challenges, leading to widespread inflation and a decrease in agricultural production. In response, the imperial government implemented a series of emergency measures, including increased tax rates and the introduction of new taxes. This period also saw the reorganization of provincial administrations, with a greater emphasis placed on efficiency and accountability in tax collection. Bureaucratic regulations were tightened, and new laws were enacted to streamline the process, though often at the cost of local autonomy. Bureaucratic regulations and laws. The bureaucratic regulations governing tax collection were extensive and complex, often resembling a labyrinthine structure that required meticulous adherence by provincial officials. The Lex Irnitana, a pivotal inscription from the province of Hispania, serves as a prime example of the legal framework surrounding tax collection. This document outlines the rights and responsibilities of tax collectors, detailing the procedures to be followed, the penalties for non-compliance, and the appeals process available to taxpayers. In addition to local laws, provincial tax collection was also subject to overarching imperial edicts, which aimed to standardize practices across the empire. These edicts often addressed specific issues, such as the treatment of tax farmers, the enforcement of tax payments, and the management of disputes between tax collectors and taxpayers. The role of the governor was crucial in this regulatory framework, as they were tasked with enforcing both local and imperial laws, often navigating a delicate balance between imperial directives and local customs. Furthermore, these regulations were not static. They evolved in response to changing political dynamics and economic conditions. For instance, during periods of stability, tax collection laws tended to favor local customs and practices, allowing for a degree of flexibility. However, during times of crisis, the central government often imposed stricter regulations, emphasizing compliance and revenue generation over local considerations. Supply chain and logistics. The logistics of tax collection in the Roman provinces present another layer of complexity. The supply chain involved in the collection of taxes was not merely a linear process but rather an intricate web of interactions among various actors, including local farmers, tax collectors, and the provincial administration. The movement of goods, particularly in agrarian regions, necessitated careful planning and coordination. During the harvest season, for example, local magistrates would organize the logistics of collecting taxes in kind, which often involved the transportation of grain, livestock, or other commodities to central collection points. This process required not only the physical movement of goods but also the management of resources such as carts, pack animals, and labor. Local officials were responsible for ensuring that the necessary infrastructure was in place, including roads and storage facilities, to facilitate the smooth transfer of goods. Moreover, the timing of tax collection was critical in managing the supply chain. Collectors were often required to synchronize their efforts with local market cycles, ensuring that farmers were able to sell their goods before tax payments were due. This necessitated a keen understanding of local economic conditions and the ability to adapt to unforeseen challenges, such as poor weather or market fluctuations. The role of the Roman army in this logistical framework cannot be overlooked. Troops were often deployed to assist in the collection process, particularly in regions where unrest was anticipated. Their presence not only served as a deterrent against tax evasion but also provided essential support in transporting goods and maintaining order during collection periods. Record-keeping methods. Finally, the methods employed for record-keeping in Roman provincial tax collection warrant careful consideration. The meticulous nature of tax collection necessitated a robust system of documentation, as officials were required to maintain accurate records of assessments, payments, and outstanding debts. The use of wax tablets, parchment, and later papyrus became commonplace in this bureaucratic process. Officials would often record transactions in detail, noting the names of taxpayers, the amounts owed, and the nature of payments received. These records served multiple purposes. They not only facilitated the collection process but also provided a basis for resolving disputes and ensuring accountability among tax collectors. The importance of accurate record keeping was underscored by the potential for corruption and mismanagement, as unscrupulous tax collectors could easily exploit discrepancies in documentation. The evolution of record-keeping methods also reflects broader trends in literacy and administrative practices within the empire. As the demand for more sophisticated record-keeping grew, so too did the need for trained scribes and clerks. The establishment of schools for scribes in urban centers became increasingly common, as the complexity of tax regulations necessitated a literate bureaucracy capable of navigating the intricacies of tax law. In summary, the history of Roman provincial tax collection is a multifaceted narrative that encompasses regional variations, bureaucratic regulations, logistical challenges, and the evolution of record-keeping practices. Each of these elements contributes to our understanding of how the Roman Empire managed to maintain its vast territories and sustain its economy through a complex and often tedious system of tax collection. As we continue to explore this topic, it becomes evident that the legacy of these practices continues to echo through history, shaping our modern understanding of taxation and governance. The tedious history of Roman provincial tax collection calendar adjustments. Part 9: Regional Variations and Comparisons. The Roman Empire, vast and diverse, exhibited a myriad of regional variations in the methods and timing of tax collection, influenced by local customs, economic conditions, and the administrative exigencies of each province. For instance, in the province of Judea, the intricate relationship between Roman authorities and local populations necessitated a calendar adjustment that was distinctly different from those employed in Gaul. The calendar adjustments in Judea often aligned with local agricultural practices, such as the harvest cycles, which dictated the economic viability of tax collection. Unlike the provinces with more stable agricultural outputs, Judea's reliance on the seasonal ebb and flow of crops meant that tax deadlines were frequently shifted to accommodate these cycles, thereby ensuring that tax collectors were not met with empty granaries and disgruntled farmers. Conversely, in the provinces of Gaul, particularly in regions like Gallia Narbonensis, tax collection calendars were much more rigid, following a strict annual schedule that aligned with Roman administrative practices. The Gallic provinces had a more structured bureaucratic framework which allowed for less flexibility in tax collection. This rigidity was in part due to the influence of Roman legions stationed in the area, which required a consistent flow of resources to support military endeavors. Hence, tax collectors in Gaul operated under a well-defined timeline, which was meticulously documented and communicated through the use of standardized Roman calendars, contrasting sharply with the adaptive approaches found in more volatile regions. This divergence in tax collection practices and calendar adjustments underscores the complexities of managing a vast empire where regional identities and economic realities shaped administrative policies. The implications of these differences were profound, often leading to tensions between local populations and Roman authorities, particularly when local customs clashed with imperial regulations. Part 10: Evolution over different time periods. The evolution of tax collection calendars in the Roman provinces is best understood through a chronological lens, revealing how administrative practices adapted in response to changing political and economic landscapes. In the early Republic, tax collection was primarily based on a system of census-driven assessments, where taxes were levied based on the wealth and land ownership of citizens. This system was simplistic in nature and often lacked the bureaucratic sophistication that would come to define later practices. As the Republic transitioned into the imperial phase, particularly during the reign of Augustus, there was a notable shift towards more formalized tax collection systems. The introduction of the census and the subsequent establishment of provincial governors with explicit tax collection duties marked a significant evolution. Augustus's reforms also included the establishment of fixed tax rates and the standardization of collection periods, which were aimed at reducing corruption and increasing efficiency. Over time, especially during the late Empire, the complexities of managing a sprawling territory led to further adjustments in tax collection practices. The increasing reliance on provincial elites to oversee tax collection resulted in a more decentralized approach. This decentralization often led to the emergence of local tax calendars that were aligned with regional customs rather than strictly following imperial dictates. During this period, the calendar adjustments became increasingly convoluted as they attempted to balance local economic realities with the overarching demands of the imperial treasury. Throughout these transitions, the role of the provincial governor evolved significantly. Initially seen as mere enforcers of tax policy, governors became key figures in negotiating tax collection practices that were acceptable to both the Roman administration and local populations. This negotiation process often required a deep understanding of local customs, agricultural cycles, and even religious considerations, as certain festivals and observances could temporarily halt tax collection activities. Part 11. Bureaucratic Regulations and Laws. The Roman bureaucratic framework surrounding tax collection was a labyrinth of regulations and laws that evolved over centuries. The Lex Aelia and the Lex Papia Papia, for instance, introduced specific guidelines for tax collection that aimed to curtail abuses and streamline the processes involved. These laws mandated transparency in tax assessments and collection, requiring that tax collectors maintain detailed records of all transactions. Moreover, the Edictum de Pretis issued during the reign of Diocletian established maximum prices for goods and services, which inadvertently affected tax collection by imposing limits on profitability and thereby altering the taxable income of individuals and businesses. Such regulations were often met with resistance from local populations, who viewed them as overreach by the central authority. The enforcement of these regulations necessitated the establishment of local tribunals and administrative bodies tasked with resolving disputes arising from tax assessments. As the empire faced economic decline and increasing pressures from external threats, bureaucratic regulations around tax collection became increasingly stringent. The Codex Theodosianus, compiled in the 5th century, codified many of these regulations, further entrenching the complexities of tax collection within a rigid legal framework. The codification process was a monumental endeavor, requiring the meticulous compilation of laws, edicts, and practices that had accumulated over centuries, resulting in a voluminous text that served as a reference for tax collectors and provincial governors alike. However, the bureaucratic regulations also led to a reliance on a growing number of clerks and scribes, whose roles became indispensable in ensuring compliance with the myriad laws. These individuals were responsible for maintaining records, calculating taxes owed, and documenting payments, thus contributing to the administrative burden that characterized late Roman governance. Part 12: Supply Chain and Logistics. The logistics of tax collection in the Roman provinces were intimately tied to supply chain management, a critical aspect often overlooked in the grand narrative of Roman administration. The collection of taxes, particularly in the form of goods such as grain, livestock, or other agricultural products, required a robust logistical framework to ensure that commodities were collected, stored, and transported efficiently. In the provinces where agriculture was the primary economic activity, such as Egypt and North Africa, the tax collection process often involved the construction of granaries and storage facilities, designed to accommodate the influx of goods during the harvest season. These facilities were strategically located near major trade routes and riverways to facilitate the movement of goods. The presence of a reliable supply chain ensured that tax collectors could efficiently gather resources and deliver them to central repositories, where they would be distributed to various parts of the empire. The challenges of logistics were magnified in provinces with diverse geographical features. In mountainous regions such as Hispania, for instance, the transportation of goods was fraught with difficulties, necessitating the development of local networks of roads and pathways. The Roman military played a crucial role in maintaining these infrastructures, as well as providing security during the transport of taxable goods, which were often vulnerable to theft and banditry. Additionally, the seasonal nature of agricultural production meant that tax collectors had to be acutely aware of local harvest schedules. This awareness influenced the timing of tax collection, as delays could result in significant losses for both the collectors and the state. Thus, the logistics of tax collection were not merely about the physical movement of goods, they also involved careful planning and coordination with local agricultural cycles, market conditions, and even weather patterns. Part 13: Record-Keeping Methods. The importance of record-keeping in the Roman provincial tax collection system cannot be overstated. Accurate records were essential for ensuring compliance with bureaucratic regulations, monitoring tax revenues, and facilitating the resolution of disputes. The methods employed for record-keeping evolved considerably over time, reflecting advancements in administrative practices and the growing complexity of tax collection. In the early days of the Republic, records were often kept on wooden tablets or wax boards, which could be easily inscribed and erased. This rudimentary method, while functional, lacked the permanence required for long-term documentation. As the empire expanded, the introduction of papyrus and later parchment provided a more durable medium for record-keeping. These materials allowed for the creation of more sophisticated documentation practices, including detailed accounts of tax assessments, payments, and outstanding debts. The establishment of the tabularium, a centralized repository for official documents, marked a significant milestone in the evolution of record-keeping. Each province maintained its own tabularium, where tax records were meticulously archived. The role of the tabularium was not merely administrative, it served as a symbol of Roman authority and governance, embodying the principles of transparency and accountability that were central to tax collection practices. Tax collectors and provincial governors relied heavily on these records to substantiate their claims and defend against accusations of corruption or mismanagement. The process of record-keeping was labor-intensive, often requiring a cadre of scribes whose sole responsibility was to maintain accurate and up-to-date accounts. These scribes were trained in the art of documentation, mastering the intricacies of Latin script and numerical notation. Moreover, the integration of record-keeping with the broader administrative apparatus of the empire meant that tax records were often cross-referenced with other forms of documentation, including census records and military payrolls. This interconnectivity ensured that tax assessments were based on comprehensive data, though it also added layers of complexity to the already intricate bureaucratic landscape. In conclusion, the history of Roman provincial tax collection, particularly in terms of calendar adjustments, reveals a rich tapestry of regional variations, evolving practices, bureaucratic regulations, logistical challenges, and meticulous record-keeping. Each of these elements contributed to the broader narrative of Roman governance, illustrating the intricate balance between imperial authority and local customs that defined the tax collection process throughout the centuries. While these aspects may seem mundane and tedious, they form the bedrock of an administrative system that allowed the Roman Empire to thrive for centuries, navigating the complexities of a diverse and expansive territory. The tedious history of Roman provincial tax collection calendar adjustments. Part 10, Regional Variations and Comparisons. The history of tax collection within the vast expanse of the Roman Empire is as intricate as the tapestry of its provinces. Each region, with its unique social, economic, and cultural milieu, contributed to the evolution of tax collection practices. From the rocky terrain of Britannia to the fertile plains of Egypt, provincial tax collection was not only a reflection of the central imperial authority but also of the localized adaptations that emerged over centuries. This section delves into the regional variations and comparisons, revealing how provincial governance and tax collection diverged, yet remained tethered to the overarching framework established by the Roman state. In Britannia, for instance, tax collection was complicated by the geographic and climatic conditions that influenced agricultural productivity. The harsh winters and less fertile soils necessitated adjustments in tax expectations, often leading to a system that prioritized land-based taxes in the summer months when crops were harvested. Comparatively, in the provinces of North Africa, particularly in the region of Egypt, the inundation of the Nile enabled a more stable agricultural calendar, which allowed for a more predictable tax collection schedule. Here, the tax collectors could rely on the seasonal flooding to ensure that crops were abundant and taxes could be collected with relative ease. This contrast highlights how local agricultural practices directly influenced the timing and collection methods of provincial taxes. Furthermore, the cultural contexts of these regions also played a critical role in shaping tax collection practices. In Gaul, the emergence of local elites who had assimilated into Roman culture led to a hybridization of tax practices. The Gallic tribes retained certain indigenous tax customs, such as tribute to local leaders, which were integrated into the Roman system. This dual approach created a complex framework where Roman tax laws coexisted with traditional practices, complicating the bureaucratic processes of tax collection and necessitating an adaptive response from provincial officials. The evolution over different time periods. The evolution of provincial tax collection reflects broader socio-political changes throughout the Roman Empire's history. Early in the Republic, tax collection was largely an informal affair, reliant on local magistrates who had personal relationships with their constituents. As the empire expanded, particularly during the late Republic and the early imperial period, the centralization of authority necessitated a more systematic approach. During the reign of Augustus, significant reforms were enacted to standardize tax collection across the provinces. The introduction of the census as a tool for assessing taxable wealth marked a pivotal moment in the evolution of Roman taxation. This period saw the establishment of fixed tax rates, which replaced the previous system of arbitrary assessments by local magistrates. The reliance on a formalized census required a robust bureaucratic apparatus capable of managing vast amounts of data across diverse regions. The implications of this shift were profound, as it not only standardized tax collection but also altered the relationship between the state and its subjects, fostering a sense of obligation that transcended local loyalties. As the empire transitioned into the late antiquity, the burdens of taxation became increasingly pronounced. The financial strains of maintaining military campaigns and managing administrative overhead led to a re-evaluation of tax policies. The introduction of new taxes, such as the annona, a tax on grain, and the capitatio, a tax on individuals, reflected an adaptation to the empire's evolving economic landscape. These taxes were often levied unevenly across provinces, leading to disparities that would sow discontent among the populace. The bureaucratic machinery tasked with collecting these taxes had to navigate the complexities of local grievances, often resulting in adjustments to collection practices that sought to mitigate unrest. Bureaucratic regulations and laws. The bureaucratic regulations governing tax collection in the provinces were extensive and, at times, convoluted. The Lex Julia Aetipapia of 9 BCE, for example, introduced regulations concerning tax exemptions and privileges for certain classes, including veterans and members of the senatorial order. These laws were intended to incentivize loyalty to the empire but also created a labyrinth of exemptions that tax collectors had to navigate. Local tax officials often found themselves in precarious positions, balancing the demands of the central authority with the expectations of their local constituents. Moreover, the complexities of tax law necessitated comprehensive training for provincial officials tasked with executing these regulations. The Roman state established various cursus honorum, a sequence of offices and public positions, which included roles explicitly focused on fiscal management. This created a tiered system of expertise, where those who ascended through the ranks had to become well-versed in the intricacies of tax law, regional customs, and the expectations of the central government. In addition to the formalized laws, unwritten customs and practices also played a significant role in shaping tax collection. The tradition of patronage, prevalent in many provinces, meant that tax collectors often relied on their personal relationships with local elites to facilitate collection. This informal layer of regulation could lead to corruption and favoritism, as tax collectors sometimes prioritized the interests of powerful individuals over equitable tax practices. Supply chain and logistics. The logistics of tax collection in the provinces involved a complex supply chain that extended from the point of collection to the imperial treasury in Rome. Tax collectors, known as publicani, were often responsible for not only assessing and collecting taxes but also for transporting the collected revenue back to the central authorities. This process required meticulous planning and coordination, especially in regions where infrastructure was lacking. In provinces with a well-developed road network, such as Italy and parts of Gaul, the logistics of transporting collected taxes were comparatively straightforward. However, in more remote regions, such as the mountainous areas of Britannia or the deserts of Egypt, tax collectors faced significant challenges. The transportation of goods was often hampered by natural obstacles, necessitating the use of local knowledge and resources. Additionally, the risks posed by banditry and local unrest could jeopardize the safe passage of tax revenues, leading to heightened security measures and the potential for armed escorts. Furthermore, the collection of taxes in kind, such as grain or livestock, added another layer of logistical complexity. Tax collectors had to ensure that the goods collected were of sufficient quality and quantity to meet imperial standards. In agricultural regions, the timing of collection was crucial. Collecting taxes too early could result in insufficient yields, while waiting too long could risk losing the entire crop to spoilage or theft. This necessitated a carefully calibrated approach, where tax collectors had to align their schedules with the agricultural calendar while also adhering to the mandates of the central government. Record-keeping methods. The methods of record-keeping employed by provincial tax collectors were rudimentary by modern standards but were nonetheless central to the functioning of the tax system. The Romans utilized a variety of tools for record-keeping, including wax tablets, parchment scrolls, and, later, codices. Information was painstakingly inscribed by hand, often requiring a skilled scribe to ensure accuracy and clarity. The records maintained by tax collectors served multiple purposes. They provided evidence of compliance with tax laws, facilitated the assessment of future tax liabilities, and offered a means of accounting for discrepancies. In addition to individual tax records, provincial tax collectors were also responsible for submitting regular reports to the central authorities. These reports included summaries of collected revenues, outstanding debts, and any issues encountered during collection. The bureaucratic demands of this reporting created a culture of documentation, where meticulous record-keeping became essential for maintaining the integrity of the tax system. The reliance on written records also introduced challenges, particularly in regions where literacy rates were low. In such cases, tax collectors often had to rely on oral traditions and local intermediaries to convey information. This could lead to inconsistencies and inaccuracies in record-keeping, complicating efforts to enforce tax laws. Moreover, the reliance on written records made tax collection susceptible to forgery and manipulation, as unscrupulous individuals sought to evade their financial obligations. In conclusion, the provincial tax collection calendar adjustments within the Roman Empire emerged as a complex interplay of regional variations, evolving practices, bureaucratic regulations, logistical challenges, and record-keeping methods. Each province's unique circumstances shaped its approach to taxation, creating a patchwork of systems that reflected local customs while adhering to imperial mandates. The intricacies of tax collection illuminated not only the organizational capabilities of the Roman state but also the resilience and adaptability of its provinces. Understanding these mundane aspects of tax collection offers valuable insights into the broader socio-political dynamics that underpinned the Roman Empire, revealing the often overlooked mechanisms that sustained its vast and diverse territories. The history of Roman provincial tax collection is a labyrinthine subject characterized by myriad adjustments to the tax calendar, which were often necessitated by political, economic, and social factors within the Roman Empire. The intricacies of these adjustments reflect a microcosm of Roman administration, revealing the profound impact of local governance on the wider imperial structure. While the grand narratives of emperors and military conquests tend to dominate historical discourse, a more meticulous examination of the lesser-known historical figures involved in tax collection, along with the specific case studies, comparative analyses, archaeological findings, and primary sources, can illuminate the complexities of tax collection. Minor historical figures and their roles in tax collection. Though figures like Augustus and Tiberius loom large in the annals of Roman history, it is essential to recognize the contributions of lesser-known individuals who played pivotal roles in the provincial tax collection apparatus. One such figure is Gaius Claudius Marcellus, a local governor of the province of Asia in the early 1st century CE. His tenure is marked by a series of reforms aimed at streamlining tax collection processes, which included the introduction of a more systematic approach to record-keeping. Marcellus is noted for his emphasis on transparency and accountability in tax administration. According to a fictional but plausible inscription attributed to him, he stated, "Let the records of our people's wealth be as clear as the waters of the Aegean, for only through clarity can we ensure the prosperity of Rome and its provinces." His reforms included the establishment of local tax boards composed of local elites, which served to bridge the gap between provincial populations and the central Roman authority. Another figure of interest is the quaestor Lucius Fabius, who served in the province of Britannia around 70 CE. His work involved the collection of the fiscus, a tax levied on various goods and services. Fabius was known for his innovative methods of tax assessment, particularly the introduction of a sliding scale that took into account the income levels of local citizens. His measures aimed to alleviate the burden on poorer populations while ensuring that the state's coffers remained adequately filled. A supposed letter from Fabius to the Emperor Vespasian reads, "In adjusting the burdens of our people, we find not only wealth for the treasury but also goodwill among our subjects." Specific case studies with dates. One notable case study is the tax reform conducted in 5 CE under Emperor Augustus, following the return of the legions from the campaigns in Germania. In light of the immense costs incurred during the military campaigns, Augustus sought to bolster provincial revenues by revising the tax calendar. The reform shifted the tax collection period from the traditional harvest months of August and September to the winter months of December and January. This alteration was intended to ensure that the provincial governors had access to funds before the onset of military campaigns in the spring. The change sparked considerable unrest among provincial farmers who relied on the harvest for their income. In response, a series of local protests erupted, particularly in the provinces of Gaul and Hispania. These protests culminated in what has been termed the tax revolts of 5 CE. Historical accounts suggest that the revolts were met with a firm response from Roman legions, which restored order but left a lasting impression on provincial subjects regarding the fickle nature of tax policies. Another significant event occurred in 23 CE when the province of Judea experienced administrative challenges due to the complex local customs and traditions surrounding taxation. The Roman governor, Quirinius, faced significant backlash when he attempted to impose a census for tax purposes, which was seen as an infringement on Jewish law. The backlash eventually led to the formation of local resistance movements that advocated for the rights of the populace against what they perceived as oppressive taxation. #comparative analysis with other regions. When analyzing Roman tax collection practices, it is instructive to compare them with contemporary systems in other regions, such as the Han Dynasty in China, 206 BCE, 220 CE. Both empires grappled with vast territories and diverse populations, necessitating unique approaches to tax collection. The Han Dynasty employed a system of direct taxation that was based on agricultural output, similar to Roman practices. However, the Han also relied heavily on corvée labor as a means of tax payment, which was not a prevalent practice in Roman provinces. The Roman system, in contrast, was characterized by a more complex array of taxes, including the tributum, a direct tax on property, and the vectigul, taxes on goods and services. The Roman approach often led to a more fragmented system of tax collection, dependent on the local elites for enforcement and compliance. This reliance on local intermediaries created a patchwork of tax practices that varied widely from one province to another, a stark contrast to the more uniform tax structures observed in the Han Dynasty. Archaeological findings and interpretations. Archaeological findings from sites across the Roman Empire have shed light on the practices surrounding tax collection. For instance, excavations in the ancient city of Pompeii have unearthed tax tablets dated to the late 1st century CE, which provide detailed accounts of tax assessments on various commodities, including olive oil and wine. These tablets reveal the meticulous nature of tax collection and the importance of agricultural products in provincial economies. Furthermore, recent excavations in the province of Britannia have uncovered a series of stone inscriptions detailing tax obligations for local farmers. These inscriptions are critical for understanding the local tax structure and the relationships between the central authority and provincial subjects. One such inscription, purportedly from a tax collector, states, "By the decree of Rome, all must pay their due, let not the plough be burdened by the weight of gold more than the yield it produces." The discovery of a large cache of bronze coins in the vicinity of the Roman fort at Vindolanda has also provided insights into the economic transactions related to tax collection. The coins, which date back to the 2nd century CE, bear the images of emperors alongside various symbols of abundance, reflecting the Roman state's reliance on tax revenue from its provinces to support its military and administrative functions. Primary source quotations, invented but plausible. While the historical record is replete with references to tax collection, the voices of the individuals involved often remain muted. Hypothetical primary source quotations can help fill this gap. For instance, a fictional account from a provincial tax collector named Marcus Aurelius Agrippa might read, "In the name of the Senate and the people of Rome, I collect what is owed, yet I see the weariness etched upon the faces of the farmers. They toil under the weight of our demands, and I wonder if my duty is not just to collect but also to understand." Similarly, an imagined correspondence between a governor and the emperor might include a line such as, "The people grow restless, my lord, they speak of revolt as the tax season approaches. I urge you to consider their plight and the burdens they bear." Such quotations, while fictional, encapsulate the tension between Roman authority and provincial subjects, highlighting the human element often overlooked in historical studies. Conclusion. The tedious history of Roman provincial tax collection and its calendar adjustments is a multifaceted narrative that intertwines the lives of minor historical figures, the unfolding of specific case studies, comparative analyses with other regions, archaeological discoveries, and the imagined voices of those involved. Each aspect contributes to a deeper understanding of the complexities inherent in tax collection, revealing not only the administrative challenges faced by the Roman Empire but also the profound impact on its subjects. As we delve into the minutiae of this subject, we unearth not only the mechanisms of governance but also the enduring legacy of taxation as an instrument of power and control. In summary, the history of Roman provincial tax collection is not merely a series of bureaucratic adjustments, it is a reflection of the broader dynamics of power, society, and economy in the ancient world, echoing through time to inform our understanding of administrative practices even today. The intricate web of local governance, economic dependencies, and human relationships woven through the fabric of tax collection serves as a reminder of the complexities that underlie even the most mundane aspects of imperial rule. The intricacies of Roman provincial tax collection are a subject that, while seemingly dry, reveals a tapestry of bureaucratic evolution, local adaptation, and the persistent struggle of governance across vast distances. This history is not merely a chronicle of numbers or dates, it interweaves the lives of minor historical figures who played pivotal roles in the implementation and adjustment of tax policies, the specific case studies that illuminate the practicalities of these systems, the comparative analysis with other regions under Roman rule, archaeological findings that shed light on the material culture of tax collection, and the primary sources that, albeit invented, help us to imagine the voices from the distant past. Minor historical figures and their roles. To appreciate the Roman provincial tax collection system, one must consider the lesser-known figures who contributed to this bureaucratic machine. Among these figures, one finds Lucius Aemilius Regulus, a prefectus from the province of Asia in the early 1st century AD. Regulus is notable for his implementation of a tax reform that adjusted the annual tribute paid by local cities based on agricultural yield. While the major historical figures like Emperor Augustus or Tiberius are often credited with sweeping reforms, it was individuals like Regulus who enacted the nitty-gritty details of these policies on the ground. His role was crucial in balancing the demands of the central Roman government with the needs of local populations. In a letter preserved in the archives of Ephesus, Regulus wrote, "In adjusting the tribute, I find it prudent to consider the harvest and the toil of the farmers, lest we burden them further in times of scarcity." This approach, while pragmatic, was not without its challenges, as local elites often resisted such reforms, preferring to maintain their own wealth at the expense of the populace. Another figure worth mentioning is Gaius Marcius Crispus, a tax collector known for his rigorous enforcement of tax laws in the province of Britannia during the late 2nd century AD. Crispus was famous for his use of the tax cart, a vehicle specially designed to transport collected taxes to the provincial capital. His efforts, however, were met with resistance, leading to the infamous Crispus Revolt of 178 AD, where local tribes united against his heavy-handed tactics. The revolt was quashed, but it highlighted the tensions inherent in tax collection, as Crispus stated in a public proclamation, "Let it be known, the taxes are the lifeblood of Rome. To resist them is to resist civilization itself." These minor figures, often lost in the broader narratives of imperial history, were the ones who faced the day-to-day realities of tax collection, navigating the complexities of local governance, economic conditions, and the ever-present threat of rebellion. #Specific case studies with dates. One of the most illustrative case studies of tax collection adjustment can be found in the province of Judea during the tumultuous period leading up to the Jewish War, 66 to 73 AD. The Roman governor, Gessius Florus, implemented a series of tax hikes that were widely unpopular among the Jewish populace. In a decree issued in 64 AD, Florus stated, "The revenue from this province shall be increased by 10%, the needs of the empire demand it." This decree was met with widespread protests, culminating in a series of violent clashes between local citizens and Roman soldiers. By 66 AD, the discontent had escalated to open rebellion, driven in part by the new tax burdens. The Jewish populace, already resentful of Roman rule, found common cause against Florus's policies. The revolt was marked by the capture of Jerusalem and the establishment of a short-lived independent government. Following the outbreak of war, the Roman response was swift and brutal, culminating in the siege of Jerusalem in 70 AD, where tax collection was rendered moot by the chaos of conflict. Another notable case occurred in the province of Gaul during the reign of Emperor Domitian. In 84 AD, a series of administrative reforms were enacted to streamline tax collection, particularly focusing on the taxation of land. The new policy, dubbed the Lex Agraria, aimed to standardize land assessments and ensure equitable tax rates. The implementation was overseen by the local magistrate, Quintus Fabius Maximus, who faced significant pushback from wealthy landowners who feared losing their privileges. Maximus, in a recorded speech to the local assembly, argued, "Equity in taxation shall benefit us all. It is the burden of the few that oppresses the many." His efforts, however, were met with fierce opposition, leading to a series of riots in the city of Lugdunum, where the local populace protested against the perceived injustice and inequity of the new tax assessments. Comparative analysis with other regions. When examining the Roman provincial tax collection system, it is essential to compare it with other contemporary systems, particularly those in the Parthian Empire and the various Germanic tribes. The Parthians, for instance, employed a tribute system that was markedly different from the Roman approach. Rather than imposing direct taxes, Parthian governors often extracted tribute through indirect means, relying on local elites to collect and remit payments. This created a system that allowed for greater local autonomy but often led to corruption and abuse by local leaders. In contrast, the Roman system was characterized by direct taxation enforced by imperial officials. This approach, while more centralized, often led to friction with local populations. The imposition of taxes by distant authorities was met with resistance, as seen in the rebellions in Judea and Gaul. Roman tax collection was also complicated by the diverse cultures and economic conditions across its provinces, necessitating constant adjustments and reforms. Furthermore, when comparing the Roman tax collection system with that of the Germanic tribes, one finds a stark contrast in methodology. Germanic tribes typically practiced a system of voluntary tribute paid to their chieftains, often in the form of goods or services. This decentralized approach fostered loyalty and cohesion among tribes, as contributions were seen as a mark of honor rather than a burden imposed by an external authority. Archaeological findings and interpretations. Archaeological findings provide tangible evidence of the Roman provincial tax collection system and the adjustments made over time. In the ruins of Pompeii, excavations have uncovered numerous inscriptions detailing tax obligations and regulations. One particularly interesting finding is a stone tablet from 79 AD that outlines the tax rates imposed on various goods, including olive oil, wine, and grain. The tablet reads, "For every amphora of olive oil, 2 denarii shall be paid, for wine, 3 denarii, and for every 100 measures of grain, 5 denarii shall be remitted to the treasury." Another significant archaeological site is the city of Trier, where remnants of tax collection offices have been unearthed. These offices, known as census offices, were where local magistrates would gather to assess property values and set tax rates. The architecture of these buildings, with their large halls and intricate mosaics, indicates the importance placed on tax administration in Roman society. Inscriptions found at the site indicate the presence of a tax collector known as Aulus Tullius, who oversaw the evaluation of land in the surrounding region. One inscription states, "Aulus Tullius, by the grace of the emperor, has assessed the land of the citizens, let no one dispute his judgment." Additionally, the discovery of various coins throughout the provinces offers insight into the monetary aspects of tax collection. Coins bearing the likeness of emperors often served as a medium of exchange for tax payments, and the inscriptions on these coins reflect the centralization of power in Rome. The varying denominations found in different provinces indicate local adaptations within the broader framework of Roman taxation. Primary source quotations. While primary source documents from the Roman era are scarce, one can imagine the type of commentary that might have emerged from tax collectors, local magistrates, and disgruntled citizens. A fictional letter from a provincial senator to the emperor might read, "Most gracious Caesar, it is with great concern that I report the discontent among the populace regarding the recent tax assessments. The farmers are beleaguered by the burdens placed upon them, and I fear that further impositions may lead to unrest. We must tread carefully lest we awaken the sleeping lion of rebellion." In another imagined account, a Roman tax collector might declare, "I have traveled far and wide, collecting the dues owed to our great empire. Yet, I am met with scorn and disdain, for the people do not see the glory of Rome in their tributes. They see only the weight of their burdens." Such quotations, while fabricated, serve to highlight the sentiments and struggles that characterize the world of Roman tax collection. In a more humorous vein, a local farmer might lament in a fictional dialogue, "What good is the harvest if I must give a portion of it to the taxman? I toil under the sun only to see my labors carried away by the whims of distant rulers. If only I could barter my wheat for a tax exemption." Conclusion. The history of Roman provincial tax collection is a multifaceted narrative, woven through the lives of minor historical figures, enriched by specific case studies, illuminated through comparative analysis with other regions, grounded in archaeological findings, and articulated through the voices of imagined primary sources. While this subject may seem tedious at first glance, it reveals the complexities of governance, the struggles for equity, and the ever-present tension between authority and the governed. As we delve deeper into the minutiae of tax collection, we uncover not only the economic implications but also the social fabric of Roman provincial life. Each adjustment, each reform, and each resistance tells a story of a society grappling with the demands of empire, the realities of local governance, and the unending quest for balance between power and the populace. In the end, the history of Roman provincial tax collection serves as a reminder of the challenges faced by those in power and the resilience of those who bear the burdens of taxation. As we reflect on this history, we gain a greater appreciation for the intricacies of governance and the enduring impact of these ancient systems on the modern world. The Roman Empire, renowned for its extensive territorial span and complex administrative systems, had an equally intricate and often tedious method of tax collection in its provinces. The adjustment of the tax collection calendar throughout the empire provides a fascinating, albeit exhaustively detailed, glimpse into the bureaucratic processes that underpinned Roman governance. This narrative will delve into the various aspects of provincial tax collection calendar adjustments, focusing on minor historical figures, specific case studies, comparative analyses with other regions, archaeological findings, and plausible primary source quotations. To begin, we must first consider the minor historical figures who played pivotal roles in the establishment and adjustment of tax calendars. One such figure is Gaius Cassius Longinus, a lesser-known provincial governor of Cilicia during the late Republic period. His tenure, which lasted from 58 to 56 BCE, was characterized by an attempt to streamline the tax collection process through calendar adjustments. In a letter addressed to the Senate, Cassius noted, "The farmers and merchants alike are confounded by the irregularities in the tax schedule, therefore, I propose a more standardized approach that aligns with the lunar cycles, thus ensuring a more predictable yield. Although his proposal did not gain traction, it illustrates the early attempts at reforming the chaotic tax collection system. Another noteworthy figure is Quintus Vibius Varus, who served as the governor of Africa Proconsularis from 9 to 7 BCE. Varus is often remembered for his controversial imposition of a new tax calendar that aligned with local agricultural cycles. In an administrative edict, Varus stated, "Let it be known that the harvest of olives shall dictate the timing of our levies, lest we burden our citizens during the peak of their labor." This approach, while well received by local agrarians, led to significant pushback from urban merchants who relied on more fixed tax schedules. The friction between these groups exemplifies the ongoing struggle within the empire to balance agricultural rhythms with the needs of commerce. Specific case studies further illustrate the complexities involved in tax collection calendar adjustments across various provinces. One such instance occurred in 33 CE in the province of Judea, where the Roman governor, Pontius Pilate, instituted a new tax calendar shortly after the completion of the Second Temple. His edict, known as the Lex Taxorum, mandated that taxes be collected in accordance with the Jewish harvest festivals. This adjustment was met with mixed reactions. While some local farmers appreciated the alignment with their agricultural practices, others viewed it as an imposition of Roman authority on their sacred traditions. As recorded in a hypothetical scroll from the period, the new tax calendar has brought both bountiful harvests and bitter resentments, for the Levites now find themselves in the service of the oppressor. In 69 CE, the province of Hispania Tarraconensis witnessed another significant adjustment under the governance of Servius Sulpicius Galba. Galba, seeking to stabilize a region fraught with rebellion, proposed a tax collection calendar that shifted the collection period to post-harvest months, thereby allowing citizens to retain more of their earnings during the critical planting season. His reasoning was encapsulated in a speech before the provincial assembly: "To levy our dues in the time of sowing is to sow discord in our fields. Instead, let us gather when the granaries are full." This pragmatic approach helped to quell unrest temporarily, showcasing the importance of timing in tax collection. A comparative analysis with other regions reveals that Roman provincial tax collection practices were not uniform, as local customs and agricultural practices influenced the timing and methods of taxation. In contrast, the provinces of Gaul employed a more rigid tax calendar, largely dictated by the central authority in Rome. The Gallic provinces adhered to a biannual tax collection schedule, resulting in a more predictable revenue stream for the empire. This system, however, often clashed with the seasonal labor patterns of the region's agrarian population, leading to periodic uprisings, most notably the revolt led by Vercingetorix in 52 BCE. As noted in a fictional commentary by a Roman historian, the Gallic lands, fertile yet restless, have proven that a tax collected in spring is as welcome as a wolf among sheep. Archaeological findings further illuminate the complexities of Roman tax collection calendars. In the ruins of a tax collection office discovered in the ancient city of Pompeii, inscriptions were found detailing the tax schedules imposed on local businesses. One fragment of a clay tablet reads, "In the month of April, all vineyards shall pay a tithe of 10% of their yield." Let no man omit his duty, for the consequences shall be severe. These artifacts underscore the meticulous record-keeping practices employed by Roman officials and the emphasis placed on compliance. Moreover, a cache of papyrus documents uncovered in Egypt reveals a system of tax collection that was remarkably adaptive to local conditions. The documents, dating back to the 2nd century CE, indicate that tax collectors were allowed to adjust their calendars based on the annual flooding of the Nile, which directly impacted agricultural productivity. One such document ominously states, "In the year of the great flood, let the tax be delayed, for the people are already burdened by nature's wrath." This flexibility contrasts sharply with the often rigid structures seen in other provinces and highlights the necessity of adapting tax policies to local realities. Lastly, plausible primary source quotations can help to paint a vivid picture of the sentiments surrounding tax collection in the provinces. A fictional letter attributed to a disgruntled farmer in Gaul might read, "O Rome, with your insatiable grasp, my fields lie fallow as I toil to pay for your excesses. When shall the harvest be mine to keep?" Such sentiments echo through the ages, reflecting the perennial struggle between taxation and the livelihoods of those who toil under the weight of imperial demands. In conclusion, the tedious history of Roman provincial tax collection calendar adjustments is a rich tapestry woven from the experiences of minor historical figures, specific case studies, comparative analyses, archaeological findings, and the voices of the time. Each thread of this narrative underscores the complexities of governance within an empire that spanned continents and cultures, illustrating the ever-present challenge of reconciling the demands of taxation with the realities of provincial life. While it may seem mundane at first glance, the intricate details of tax collection remind us of the profound impact these systems had on the daily lives of millions, ensuring that even the most seemingly boring aspects of history can reveal fascinating insights into human behavior and governance. And so, dear listeners, we come to the end of our soothing journey through the intricate tapestry of Roman provincial tax collection calendar adjustments. As we have wandered through the winding paths of history, we've explored the meticulous efforts of administrators striving to balance the demands of governance with the rhythms of daily life in the provinces. From the nuanced changes in the calendar that reflected the agricultural seasons to the undeniable impact of these adjustments on the lives of ordinary citizens, we have illuminated the layers of complexity that often lie hidden in the pages of history. Thank you for joining me on this gentle voyage through time. We have delved into a subject that, while perhaps seeming tedious at first glance, reveals the fundamental ways in which societies adapt and respond to the ebbs and flows of their environment. These ancient practices resonate with us even today, reminding us of the importance of structure and harmony in our own lives. Just as the Romans sought to ensure that their tax systems aligned with the needs of the people, we too can find comfort in the rhythms that govern our daily routines. As you settle down to embrace the tranquility of sleep, may you carry with you the lessons of patience and adaptability. Let the calm of the night envelop you, just as the Roman provinces were enveloped in the gentle embrace of the changing seasons. Allow your mind to drift, free from the burdens of the day, and imagine the peaceful fields of grain swaying in the breeze, the laughter of market-goers echoing through the streets, and the warmth of community that flourishes when systems work in harmony. Should you wish to revisit any part of our narrative, remember that you can replay this exploration as often as you need. Each listen can serve as a gentle reminder of the past, an anchor to ground you in the present, or simply a soothing backdrop as you drift off into slumber. As the stars twinkle outside your window and the world quiets down, I wish you a night filled with serene dreams and restful sleep. May the knowledge we've shared tonight settle softly in your mind, like a comforting blanket, inviting you to rest and recharge for the day to come. Good night, dear listeners. May your sleep be deep, your dreams be sweet, and your heart be light as you embark on this nightly journey into the realm of dreams.